Hi! We hope you'll find this video helpful in your quest to gather more info on reverse mortgages. In fact, we've put together an entire series of free videos so that you can get a better understanding of how reverse mortgages work and if it might be the right solution for you. Hello, we're here to talk about the cost involved with reverse mortgage. Let's start by defining approximately what the total costs are. On a $150,000 house, they're approximately $9,000. The larger the value of the house, the higher the fees are. On a $250,000 house, they're approximately $13,000. The amount of money that you have to pay out of pocket is nothing because the costs involved are added to the loan.
The costs on a reverse mortgage really break down into three components. The first is the mortgage insurance premium. That's paid to FHA. The second component is the origination fee, paid as compensation to the lender. And the third component is the other closing costs. They're paid to third-party vendors such as appraisers, title companies, and attorneys. HUD doesn't let the lender mark up these fees at all. Now, the mortgage insurance premium is the largest portion of the total cost. It does two things for you. First, it makes it so the loan does not have any monthly mortgage payments. Second, it ensures that when you die, your heirs will not be responsible for any portion of your reverse mortgage. This is important because it protects your heirs. The amount of the mortgage insurance premium is 2% of the value of your house.
So if your house is worth $200,000, the cost is 2% of that, which is $4,000. Let me explain the mortgage insurance requirement. The biggest reason is that it allows you not to have any monthly mortgage payments. That's a big deal. It also protects your heirs, and here's how. Let's say you do a reverse mortgage and you live a long time, but your house doesn't go up in value, and the interest continues to accrue since there are no monthly mortgage payments. Well, ultimately, the loan exceeds the value of your house. Then, when you permanently leave the house, either from selling it, passing away, going on to a nursing home, the reverse mortgage becomes due. If the reverse mortgage balance is greater than the value of the house when it's sold, that shortfall is covered by the mortgage insurance, and that protects your kids.
Good job on that, Ginger.
I'm glad you approve.
One other thing to note about the mortgage insurance premium. There are two parts to the cost. The first part is the upfront cost, and then there's a monthly charge of 1.25% on an annual basis of the loan balance each month.
Let's recap this discussion of the cost. In total, they'll typically run $9,000 to $13,000. It's nothing out of your pocket. All the costs are rolled into the loan. But on this point, understand that if you start a reverse mortgage and back out before it's consummated, you will have to pay for the appraisal out of pocket.
And as we said, the total costs fall into three categories. The mortgage insurance premium paid to the FHA, the origination fee paid to the lender, and the third-party vendor costs paid to people like the appraiser and the title company.
And one final thing. Even though there's nothing up front, the total cost can be substantial. And if you sell your home within 3 or 4 years of taking out a reverse mortgage, it can make the loan expensive. So you need to plan on staying in your home long term. The longer you stay in your house, the less expensive the loan is. So my advice is appreciating the fact that this is a loan where you want to anticipate staying in your house long term. Well, thank you for watching. We hope we've answered all of your questions about the cost relative to a reverse mortgage, but you may have more, and we are here to assist you anytime and in any way. So please, call us at Reverse Mortgage USA, and remember, life is a blessing. If you're looking for more info on reverse mortgages, go to rmeducator.com to view the entire series of free videos.